I'm very excited that you'll be joining us for our final discussion of the day with Pavol Rusnak from Trezor and Alex Thorn from Avon Ventures, moderated by our very own Christine Sandler, Head of Sales and Marketing at Fidelity Digital Assets, on the topic of privacy as a competitive advantage. Christine.
Hi, everyone. Thanks for the introduction, Ria. I apologize for the background noise, so we'll try to do our best to kind of minimize that. But thank you, Michel and Pavol, for joining me today. The work that you've done in the space has been fantastic. I think Alex is with us, but his video is blocked. Oh, dear. Stopped by host.
There we go.
But Alex, are you with us? There he is, and a snazzy background. And we're joined by Alex Thorn from Avon Ventures as well. So look, I think what we've learned in the last 2 days is obviously there's probably a lot more to discuss around privacy, but it's front and center and part of the value propositions of large organizations like Apple. I mean, like Apple is leading with privacy. The purpose of this panel is to discuss privacy as a competitive advantage. So how Michel, you're with Nodl, you are leveraging the concept of privacy as a benefit for your clients. Is that leading clients to you? And Pavol, and how you are also leveraging the concept of privacy with your throughout your business. So can we kind of just kick it off by talking about how we preserve the decentralized nature of this ecosystem as we're also running towards the institutionalization of crypto. We think that obviously that'll lead to the involvement of more trusted intermediaries. Is this a positive or is this a negative? I will kick it over to you, Michel, first. Even though you just finished speaking for a bit, I'll kick it over to you.
Yeah, I think, we have a very strong privacy culture from the beginning of our project. We are not even a company yet, and we value our customers' privacy a lot. We were inspired a lot by what Purism is doing in the laptop and now phone industry. And like not keeping customer data after a product is shipped, not tying a particular serial number to a particular customer. And I think people value that a lot, and they will be valuing it more and more. And yeah, as you said, now Apple is shown, like who would believe 2 years ago that Apple would be the leading privacy company in the big tech? But I'm an Apple user, and I'm pretty convinced by what they are doing actually.
That's good to hear. That's good to hear. Pavol, do you have comments on preserving the decentralized nature and privacy as at the forefront?
Yeah, I think it's very, very important to protect the privacy because now we are in the middle of decentralized revolution, and still these decentralized solutions haven't really met the convenience of centralized ones, and we still do see there are new ways of managing, for example, cryptocurrencies, but these are still centralized or not that private. So I think I think we need to kind of match this convenience to be even able to attract more people.
That's awesome. Alex, I know you have thoughts here, but let's kind of tack a little bit because Pavol, you mentioned a pretty key piece here, which is convenience. Are we getting kind of lulled into this thought that convenience is a panacea and that privacy is less important? Or do we need to make privacy more convenient to consume? And I think my question is, look, I think our issues are leading to greater awareness, but just like in the previous panel, is privacy only becoming important if someone has a privacy breach, or is it impacted negatively by privacy, or is it part of the discussion already? So I know there's a couple of questions there, but let's talk maybe about the balance of convenience versus the need for privacy and how you've kind of infused that in your business. Because we're still going back to that privacy is a competitive advantage.
Yeah, so that's the question for me. Yeah, so I think that in order to compete with these convenient tools that are already available, but in a centralized, non-private way, we need to come up with tools that have 3 attributes. So they are secure, they are private, and of course they are user-friendly. And of course, as a co-founder of Satoshi Lab and Trezor, we do think that the hardware wallet is one of the ways how to achieve that the triangle, that good combination of all of these 3 attributes. Maybe there are some other ways how to combine them, but we are currently exploring this option. Because honestly, I think that we can make tools that are secure and private, but if they are not so attractive to people to use because they are clunky, we don't stand a chance in this competition.
Thank you, that's great. Alex, when you're evaluating companies, how do you look at the balance between convenience and privacy? Is that something that figures into the metrics of a venture firm like yourself?
Yeah, it definitely is. I mean, as a starting point, I would definitely say that there are more people, consumers, interested in privacy. That's indisputable. I mean, this is a growing base of people that are actively seeking out privacy tools. You see that with like the success of things like the Brave browser or the massive explosion in VPN. I mean, no one, VPN was a niche tool maybe only like 3 years ago. Now I have, normie friends who have multiple VPNs, right? It's a very normal thing, VPN on mobile. So I do think convenience is absolutely important. I mean, VPN is a good story there. It's become very easy with these standalone VPN apps. You don't have to run OpenVPN yourself. And it has made it very easy for people to get some measure of privacy. And I think it's important, you think about like, Ben Franklin's old quote, that people who would sacrifice liberty for security deserve neither and achieve both. I think of privacy in a very similar way, right? I mean, it is always going to be a trade-off between convenience and privacy. Will always be easier for you to run out in the middle of the street, take no precautions at all, right? That'll always be easier than taking precautions. But we've got so many good people, designers and user experience designers and developers in this space and in software in general today that we're seeing a lot better user experience. And I think both Nodl and Trezor are testaments to that. I mean, Trezor, I don't remember where I read this, Pavol, but you guys sold, maybe was it 1 million devices at one point? I think I saw since the sort of, I mean, that's a lot of people using what to an outsider of this industry might sound like a niche product, right? And it absolutely is not. I mean, many people are using it. So yes, definitely, I think convenience is very important. When we look at companies, we want to see that it's, we were looking at an addressable market. How many people could possibly buy this product, right? And if it's very hard to use, then of course that's going to limit the size of that addressable market. But so we take that in consideration when we evaluate companies. But I'm seeing a lot of great improvements from the companies themselves, making this stuff easy to use. And I'm seeing consumers become more adept at using them. So I think they're meeting, more in the middle. It's not all one-sided, but anything companies can do to make it easier to be private by default, I think is a huge advantage.
That's great. That's really good. Both of you mentioned something that I was unaware that initially in my research on your organizations that you don't store user data beyond kind of an initial period. So we're also talking about convenience and the user experience. what does a support model look like for an organization that's not holding user data? Michel, happy to have you kind of focus on that. And Pavol, I know that also that's part of your value proposition as well. I'd like to talk to you about some of maybe the unintended consequences of not holding that data, and how you've dealt with that as well.
Mm-hmm. So actually, good you mentioned before the previous panel, because I had a reaction to something someone said about tracking usage of applications and devices. I'm a strong believer. For the record, I worked for HTC on exactly user data and behavior collection. We had 50 million devices reporting daily with detailed user behavior. But now, as my own company, I'm making big efforts to not have the devices go home, and we actually don't even know if the user opened the box and unpacked the device. And regardless of that, we get a massive and very valuable user feedback. We have a Telegram channel and a support email address. And basically, the only thing we ask people for is the serial number of the device, which we can't tie to a particular user, so they can use a disposable email address to contact us, or a disposable phone number. And we basically, all the improvements we do on our products come from spontaneous user feedback. So I really don't feel like it's affecting us a lot as a commercial project to not collect in a forced manner user behavior on the devices.
Mm-hmm. You are muted, Christine.
Sorry, muted. So have you had a similar experience in terms of providing support on an ongoing basis if you're not holding this data as well?
Yeah, it's very similar what Michel had said. First of all, we support all our customers, no matter what time did they order their devices. So cleansing our user data does not really affect that, whether we support them or not. We even have cases when people who bought our competition's product asks on our support, because it's very similar. They are using the same standards we came up with, and we are happy to help, especially in case the support of the competition is so overwhelmed by some issue. It's how we can basically help the whole ecosystem. And our mission, the grand mission, is to help people get into Bitcoin. So that's one of the things we can help. But back to the question, we only have customers' data that are directly tied to the physical order itself, and we don't store any behavioral data like Michel mentioned. We don't analyze this. We don't want to know what users are doing, basically, and we can't even pair the person who ordered the device with the person who is using the device. It's same with Nodl, like with Nodl. And that's because the initialization of the device happens only after you unbox it. So there's no serial number that can track these two together. And we clean our order data 90 days after the purchase. And we could have chosen less, like 30 days, for example, but we had some extreme cases when the shipment went a little bit longer than this 30 days period. So it made it really complicated to resolve any shipment issues when all the data are gone, basically. So that's why we found this sweet spot, which is I think quite good for the protection of the data and brings the benefits of resolving problematic shipment. So after the cleansing, the only thing we keep is the order date and order identification, which is like meaningless sequence of letters and numbers, BC14 D7, for example. And if a user can present this identification, we know when did he order the product. So this is triggered when a customer is asking for a replacement of the unit, for example. So that's the only information we need to keep about our users, and it's great. It brings a lot of peace to my mind as well, not only to the minds of our users.
That's good to know. So I would imagine there's probably some compelling advantages. I'm thinking you probably have a pretty significant security advantage as you no longer have this kind of honeypot of data. Which would you rank? Security, your legal reg spend might be less, or is this a marketing advantage? What do you think are the biggest competitive advantages, given the fact that we're talking about privacy as a competitive advantage here, in terms of not holding this data?
Yeah. For us, I think it's mostly marketing opportunity, because our target group is inherently very interested in protecting their privacy. And like you mentioned, if we don't store this data, we are less attractive for potential attackers. So probably the attackers would try to attack our competition. And people who are in the hardware wallet scene, this is the factor they decide. They do a lot of research, and it makes a lot of difference for them to decide upon these facts. About the saving from the legal side, I'm not probably the best person to ask, but I think in the short term, if there are some regulations who mandate privacy, it's creating a burden for small companies, because they need to study all these regulations and then figure out how these apply to themselves. So for smaller companies, it might be problematic, because they don't have such big legal teams. But in the long term, I think if everything is set up correctly, it might bring a lot of benefits, because probably the cost that is spent on these things is over all the years lower. Of course, in the European Union there is this GDPR directive, which even gives users possibility to ask for removal of any data associated with them. And it sounds really easy, but it's a very long specification, and we spent several months studying it. But yeah, it's bringing a lot of benefits for the user. So it was something we wanted to go through.
That's great. Do you find any complications in terms of either of you, in terms of reporting on your on any kind of metrics? So typically you use either sales data or order data to report on kind of growth metrics. Is that a complication, or are you fully separating that data?
Mm-hmm. Like we try to measure growth and various sales indicators just by the product information. We know that the product was sold, even if we scrape away the information who it was sold to. So it is possible to create growth metrics using this aggregated data where you have just products and destination countries. But of course, it's much harder as compared to the companies who have their full analytics arsenal at their hand. But I think we are managing that, and it is possible to do the projections into the future, even if you don't store user data. You can't predict the behavior of an individual, but that's not really interesting for us, because we are selling hardware wallets. So it's not like people are buying hardware wallets every month. So we don't need to predict the behavior of an individual, but when it comes to whole countries, we are perfectly fine with looking just at the aggregates data.
That's great. That's great. Michel, are you seeing similar benefits as well?
Yeah, totally. So at first we didn't really plan to not keep this data, but we decided to do it after a few months of selling, just because we were seeing other people doing that, like Purism. And yeah, one other advantage is the less data you have, the less you can be asked for. So if a governmental institution asks us for the list of people who purchase the full node, which can probably be serious or big Bitcoiners, we just don't have this information. And so GDPR is like a double-edged sword, because it both requires you to keep the data, but if the user asks for it, you have to delete it. So we default to guest mode on our store. We doesn't create an account, so we don't have to keep it if the user doesn't choose to create an account. But anyway, now after 1 or 2 months, we remove all the data after shipping. And yeah, as for reporting and marketing is concerned, the marketing came like naturally after this, but I don't think people are specifically coming to us just because we are doing that. And for reporting, we just look at the total number of units sold per month. We don't really care if the person is in Kuwait or Israel or United States or whatever. So.
I think this really leads naturally into the next broad topic. And the next broad topic is something that Alex has already raised, which is there an addressable market for folks that are interested in making purchasing decisions that are privacy-based? I think we are starting to see that emerging data. I think both of you would probably have opinions. All three of you would have opinions on this. Would love to know what you're seeing in the marketplace. Are you banking on an increase in current demand or any kind of shift with respect to growth in privacy consumption? Would love to kind of get all three of your thoughts on that concept. Pavol, since you seem to be front and center on my screen, I'm going to ask you first.
All right. So we are in the business of allowing people to essentially becoming their own banks by not having their cryptocurrency stored on the exchanges. So it makes sense that privacy-aware people are inherently leaning to our solutions, which are self-sovereign and non-custodial. So, of course, if there is a privacy debate, sooner or later, this topic of having a hardware wallet or having a full node at home is on the table. And yeah, I mean, it's the inherent part of what we do, and the more people are talking about privacy, the more activity we see in our channels. There is word of mouth everywhere in case there is some kind of privacy breach. So this is something that can't be ignored, and it's very, very helpful for businesses like ours that people are slowly starting to realize the value of their private lives.
That's great. Michel, similar? Are you seeing similar trends? Are you seeing an upswing? Is this also any way related to negative activity? So if there is a breach or a compromise, do you see a pickup in activity?
I would say there is much more offer than demand in the privacy business, software and hardware. First, we see a lot of it because we are going to hackers congresses, we bath in this daily, and we work with people who are privacy projects. So we are aware of any privacy project and any privacy breach that happens in the world. But what I see, like from my everyday life, is That doesn't prevent people from buying Google products. That doesn't prevent people from buying Xiaomi watches and home alarms and stuff, which are basically big spywares. And the popularity of TikTok is also something we can look at. And I don't see that decreasing anytime soon. So companies like Apple are forcing privacy onto people because now you can use disposable Apple email identities for each application, so they can't. So one application editor can't tie your identity to another application editor, but that's like forced privacy, and it's not demanded privacy as far as I see it from my perspective.
Alex, you and I have actually spoken about this topic. Are you seeing a greater increase in folks that are making decisions, commercial decisions around privacy? And then are we now in a place where we should be thinking about making privacy as convenient as possible to spur adoption? Or do you think it's only going to come from demand? Is it a product? Is it a product dev opportunity, or is it a marketing opportunity?
It's such a good question. I mean, on the addressable market question, the thing that I think, Bitcoiners who own, Trezor ones or Nodl, I think I have the Nodl one is actually what it's called, which is not the high end Nodl. And I actually have, so I have both products from both Trezor and Nodl. And I wonder how many, I love them and use them regularly. I have to think of it today as a subset of the broader Bitcoin user population or even crypto population. So I think these businesses scale brilliantly as the technology and currency becomes more widely adopted. And in terms of, I think there's a huge marketing. I think Apple it's mostly marketing, right? They're selling hardware. They're not the ones that are losing out from making their customers private by default. I think the new iOS 14 that's coming out, or maybe was just released, actually bricks like Google ads and Facebook ads, or makes users opt in, Apple users opt in to those ads, very likely to not have that many, or a significant portion of Apple users will not end up opting in, right? So they are forcing it. Michel's right. I think that gives them a lot of brand clout. I think Jill Carlson said on our panel earlier that there's a big discrepancy between the number of people who respond on surveys that they care about privacy and the number of people who spend money for privacy, right? To actually get privacy. So there's, and some people might look at that as a negative thing. I actually look at it as a positive. There's a huge number of people that want to be private. They want to, right? And I think there is a product dev opportunity to bridge that gap. I view the discrepancy as a bridgeable gap, whether that's through more convenient UX or cheaper products or whatever it is. And that's what's been so exciting to watch. I think Trezor and Nodl both is that in terms of wallets and in nodes, they've taken giant leaps from sharded key paper wallets like the Bitcoin billionaires did, or even Bitcoin Core standalone. If you have to run it in the command line interface, it's not very user friendly. So I think there is a product dev opportunity that can absolutely grow the addressable market size. And I think there's a marketing benefit. I mean, one of the fascinating things to see is just that, it's not just GDPR or California's regulation, although those pressures are there pushing for privacy like they've never been before. But there is a cultural, I think, an observable cultural demand for privacy tools. Even if they're not yet spending their money on them, right? I mean, in mass. So I think there's a huge opportunity for both, Christine. And definitely anybody that can help close the gap between those people who are already spending money for privacy to help achieve privacy, which is a growing group of people, and the broader set of the population, I don't know, maybe a third who say it's very important. There's a huge addressable market there to capture.
All right, I have one final question for the panel. So with all this awareness around privacy, there are potentially opportunities. Are there potentially opportunities for individuals to participate in the economics associated with their own data? Is that data really valuable, or is it valuable only if it's kind of pooled as part of a larger program? Would love to kind of get your thoughts on that, because we have just a little bit of time left, but I think that's maybe an important kind of competitive differentiator. And there are some projects in the space that are really focusing on, you own your data, you own the opportunity to monetize that data. Is that real, or is that a fantasy? Michel.
So I participated in a few projects which were trying to allow you to monetize your own data. Like you could fill like a profile and then choose to share it or not with particular companies for particular marketing campaigns, and you were just getting cash, straight cash for this data on this app. It never really worked, because I think what the data marketing is looking for is like a huge behavioral data on a big amount of people, and that, I mean, it's like how many times you search something on Google and then or on Amazon, and then you get an advertisement about something you talked the day before and you never search on your computer, just because 1 million other people who talked about the same thing search for that on that particular day, and you matched the profile, like someone is listening to you in your room. So yeah, I think today, at least today, what is valuable for these big selling companies is this big corpus of data, and not individual data. But that might change if the economy decentralizes, as we hope it will.
Answer. Pavol, any thoughts there?
Yeah, I think it would be very interesting to get this answer from someone from the big companies such as Facebook or Google, because they probably already know the answer, if it's possible to monetize the individual data without having all other data of all other people. But I tend to agree with Michel, what he said, that this data is becoming very valuable if you can compare it with another piece of data. So if I have if I have recorded your behavior, I might be able to predict what you do next. But if I compare your past behavior with past behaviors of other people, I think I will have opportunity to make much better prediction, because I have already seen the same situation you are in now, maybe at some other person who was in the same situation a couple of years ago. So, and I think the data is collected just to be very good at the predictions, and I think we are in prediction data business, not just collection and analyzing. So yeah, but Michel wanted to add something, I guess.
Yeah, I just wanted to add that you know these coupons you get at the cash register in the shop when you buy groceries. That's exactly how it works. There is a big data appliance behind it, and it real-time analyzes your shopping cart to give you coupons of what similar people bought to make you buy these things the next time you come.
It's really fascinating. I'm struck by a conversation with a colleague, and I said, look, you know, you realize like all of this data is being mined. I'm not really sure that they're your decisions. And this person said, no, but I bought the greatest frying pan from Instagram. And like, but did you make that decision, or did someone else make that decision for you? That's the real key issue.
Yeah, it
Alex,
makes you wonder.
I know.
There's like there was an old joke about television advertisements. It said, you know, why do you think they call it TV programming, right? You're the one being programmed. It's not clear who's whether you really have you know, agency, personal agency, when things are coercing your control and suggesting your compliance and your participation in so many different behaviors. the algorithmic like analysis of big data that's collected on all of us. I forget, there's these companies whose names nobody knows. I mean, someone knows, but I don't even remember the names that just aggregate this marketing data, right? It's not even the Facebooks, it's like these giant data warehousing companies. And I remember reading once that one of them had 800 data points on every American. I mean, that's just a truly shocking level of detail. You know, and it's just interesting. Like we were talking about this with Nick Carter and Brayton and Jill earlier. You know, what is the business model if you're specifically privacy? If you say we're not going to take, I mean, obviously, and what I'm seeing a lot is hardware is a fantastic way to participate in the privacy economy, because you're not, you know, the internet, web 2.0, the Googles, the Facebooks, the Instagrams, the TikToks, you are the product, right? They're monetizing data about their users. That is their business model. There aren't really many other business models that have been successful on the internet. I mean, there's subscription-based businesses, right? But hardware has lasted well. Apple's mostly a hardware company. Both Trezor and Satoshi Labs and Nodl are hardware companies, at least at their, you know, base, you know, most base layers. And I think that's really interesting. It's so fascinating that in like the more digital we've gotten, like the more physical we need to be if we want to be private. So yeah, I mean, I think it's really fascinating. I love to have devices that I can trust, and I think more people are going that route. And it's just great for Bitcoin that people can securely store their assets in ways that have never been possible, and with other types of assets. And you know, gosh, I was involved in Bitcoin before hardware wallets were really, you know, even ubiquitous at all. And what an advancement it's been. So just really happy to see that.
Well, guys, that's a wrap. I just want to thank you, Michel, Pavol, for both being builders and advocates of privacy. You're extraordinary. Your products are extraordinary. And Michel, thank you for rolling with the punches, because you didn't even see the questions in advance. So you are a true pro. And Alex, thank you for everything. You are an extraordinary resource to me and to everyone else. With that, yeah, that's a wrap. I hope you enjoyed yourselves.
Yeah,
Thank you very much.
Thank you very much for inviting us.
Pleasure.
Guys.
Thank you so much, Christine, Pavol, Michel, and Alex, for a fantastic last session. While we are far from privacy being mainstream, what you highlighted is that crypto users have increasing optionality, and it's up to us to make the trade-off between privacy and responsibility versus convenience and ease. But over time, I think we'll see these things converge. So a massive thank you to all of our conference participants for shedding light on a critical topic that's becoming increasingly relevant to everyone, both in and outside of the crypto industry. And before we leave you for the day, I wanted to revisit some of the themes that our participants discussed over the last couple days. One of them is that data collection is inevitable. Yesterday, Deanna started off the conversation sharing that 81% of US adults surveyed by Pew Research believe that the potential risks they face because of companies collecting their data outweighs the benefits, and 66% feel the same way towards data collection by the government. Consumers also believe that more data doesn't necessarily yield better and more personalized products. However, 6 out of 10 adults surveyed don't think that it's possible to go through daily life without having this data collected about them. Unfortunately, as Jill Carlson mentioned earlier today, consumer behavior doesn't always line up to their survey responses. Clearview AI is a scary example of an unknown startup that scraped 3 billion social media images for a facial identification tool that it provided to regulators and companies without any oversight or consent. The problem that this example presents is the inability to share information without having a say in how it's used. Another example is a lawsuit against Yodlee, a large financial data aggregator, for putting consumer financial data at risk by selling it in an unencrypted way. Consumers often have no knowledge or say in having their data collected and sold by such aggregators when they deal with common service providers like their banks or financial institutions. While such companies claim that this data is anonymized, there are studies that show that researchers have actually been able to unmask individuals using this data. These examples are troubling, especially if the sensitive data falls into the hands of bad actors. It's also troubling because it can reveal information about an individual's health, religion, political views, and other financial information to the end user, bad actor or not. The potential risks that are associated with these practices, especially as it relates to financial data, is rising as cash use declines and more transactions take place electronically or online. Cash use has been declining at a slow and steady pace that will likely be accelerated by the pandemic. From my days covering the payments industry, I learned about all the reasons why cash is bad, but it was always from the point of view of the merchant or the service provider. After joining the crypto industry, I came to understand how important it is to have cash as an option. It's an option that's increasingly critical to people living in the United States and other developed countries, and it's especially critical for people living in parts of the world where it's much more possible that the data that they reveal may be used against them by not just by so-called bad actors. But as Alex Gladstein highlighted in his presentation, and as we've been discussing throughout the conference, there are a lot of reasons to be optimistic. And one of these reasons is the birth and evolution of Bitcoin, and with it, the crypto industry. What we've heard in the last few days is that the crypto industry has revived interest in innovative cryptographic solutions to the challenge of privacy in a digital environment. This innovation will also flow to the mainstream and be adopted by stakeholders in other industries. For example, yesterday, Commissioner Brian Quintenz talked about the benefits that multi-party computation and zero-knowledge proofs may provide his agency in record keeping, so that they can verify that a registrant is keeping information that they're required to, while significantly reducing transmission risk, protecting the integrity of the information, and saving time in verifying that it's there. In a separate panel, Carol Fowler told her how her company, Transmute, is leveraging cryptographic solutions in the biotech and semiconductor industries, allowing stakeholders to work together without revealing their IP. Dan Gorfine from the Digital Dollar Project also spoke about the use of crypto innovation to inform the design of a digital fiat currency that offers the positive traits of physical cash, but in a digital environment. However, one major takeaway from the conference with regard to regulatory, business, and consumer applications is that protecting our data and privacy means that we must be willing to make trade-offs and take responsibility. From an individual standpoint, we heard from Jameson Lopp, who educated us about what it really takes to live off the grid, highlighting that common services that we rely on, such as credit, debit, and insurance, are all anti-privacy. Jameson also shared some eye-opening numbers around how expensive it can be to achieve complete privacy. From a more commercial standpoint, the digital fiat currency panel discussed the trade-offs that will be considered in designing CBDCs, such as privacy versus performance, convenience, and speed, and how these trade-offs will differ from one region to the next. Another theme was privacy as a competitive advantage. What was encouraging is that the speakers involved in the conference believed that these trade-offs associated with enhanced privacy and security are worth exploring. They also highlighted the trend that sensitive data is increasingly being viewed as a liability, especially with the rise in privacy-focused regulation and loss of reputation due to breaches of privacy. In her presentation earlier today, Susan Myers mentioned that businesses facing fines of up to hundreds of millions coming out of the EU. She also called out that states such as California and Massachusetts have been vocal about enforcing consumer privacy rights, as well as the emergence of bills that allow individual consumers to bring lawsuits if their data is breached. These are a few reasons that businesses are recognizing that collecting and safeguarding sensitive data might not be worth the costs and the risks. A different angle is that products and services that offer enhanced privacy can also provide a competitive edge over those companies that abuse their rights to our information. One example that was mentioned earlier today is Apple, which has made privacy a key part of their brand and mandate, as well as a consumer education tool. In the last session, it was refreshing to hear that firms like Nodl and Trezor's goal is not to collect and store customer data. The panelists also discussed that companies can leverage privacy as a marketing tool. And as Michel said, the less data you have, the less that you can be asked for. If there's one thing that you leave with after listening to the discussions of the past few days, I hope it's that privacy is something that we should desire and demand. We're in the midst of migrating all aspects of our lives to the digital realm. And this process has been accelerated thanks to COVID, with almost all of our transactions and interactions taking place virtually these days. But as we've seen over the last couple of days, there are so many people working on privacy and building new privacy preserving technologies that give us reasons to be optimistic about the state of privacy in the future. This was one of the main motivations in putting together this forum, to give the brightest minds a platform to educate us, debate the pros and cons of new technologies and services, and identify challenges that we should address for our clients and users at Fidelity and for the industry. So that concludes our privacy conference. The presentations and panels that were recorded and will be available in the coming weeks. We really hope you enjoyed the event, and we look forward to the day that we can do this in person. Thank you.